Now, welcome in to the Real Investment Hour.
Welcome to the Real Investment Hour. I'm Danny Ratliff, certified financial planner, here with John Coumarianos. Big day in the markets in the sense of longevity here with this bull market. But John, why don't you get into the market wrap?
Sure. So two interesting things going on. We have a bad political news last night, but we have a record long bull market now. Today is the day where it became a record long bull market. And so the Dow dropped 88 points. Most of that decline came very late in the day. The NASDAQ just seems unstoppable. It was up 29 points to 78.89, up almost 0.4%. And the S&P 500 was basically flat for the day.
So a little bit of news overnight as far as, with Cohen and Manafort and how this is going to impact potentially Trump moving forward. Obviously, it could have an impact on elections.
Sure.
Not a political show by any means, but certainly looking at the financial impact of some of these things. Still have a lot yet to be done as far as what's on the plate for Trump in the sense of these tariffs, still trying to push these things along. And he is holding the line. I mean, he's not moving one bit.
Yes, I'm really surprised at how well the market is taking it. The market has not really moved very much at all, even on very bad political news last night. I might have expected, a really big down day today, but so much for my one-day prognostications.
Well, one good thing was that we woke up and Target had some really good news this morning. I do think that we may see some muted returns over the next day or two in the sense that we have the Fed Open Market Committee meeting minutes coming out. And this is going to be very important to see what do things look like here?
Right.
What's the verbiage they use?
Yep.
So that's going to be big. We have Jackson Hole. Tomorrow night, they're going to announce, the Kansas City Fed is going to announce who's going to be there. It's usually a who's who in the political arena and the financial arena, and saying what is going to be most important here. Obviously, emerging markets probably going to play a very big deal. The rising dollar, what's the impact there? And then not to mention the big things, probably going to be tariffs is what I imagine.
Yep. I noticed today on Twitter a very good Bloomberg columnist, Lisa Abramowitz, who's really an excellent bond market maven. She always tweets interesting things and snippets from the Bloomberg terminal. And so she tweeted today that the Fed futures are at 100. They're predicting 100% that there'll be a rate hike in September, and the market seems to take that, just fine, really, with no problem.
Well, and that's kind of interesting because a lot of the quote unquote pros out there have said, look, it's likely that, we'll step through September, we'll raise in December, give everything a little bit of a breather. Yep. And I think the biggest worry so far is the trade war.
Yep.
How is that going to threaten the strong economy? Where are we going to see, where is there slack? Or where's there room for growth, right?
Right.
Because when you get to these stages in a game, it becomes a little bit more difficult to keep pushing this forward.
Yep.
So lots of news out there.
And conflicting signals, too. Speaking of the bond market, another author I like very much at the Financial Times, John Authors, tweeted today, he showed also a Bloomberg snippet of the yield curve and how flat it is. I think we reached a record or a flattening we haven't seen in a decade. 0.23, 0.22, something like that. So that's the difference in yield for the listeners between the 2-year Treasury and the 10-year Treasury. When that gets flatter, inverted, when you start to get paid more for lending 2 years instead of lending 10 years, that's the bond market telling you that there's likely to be an economic slowdown.
Yeah, bond market's certainly not buying it. We saw the 10-year was down just a tad bit at 2.82.
Yeah.
So it's down almost, just over 2 basis points,
yeah,
which isn't a huge move, but it is fairly significant considering the number we're coming from.
And also where the 2-year is. You're getting paid as much to lend the money to the government for 2 years as you are for 10 years. And it's like, what's up with that?
So, interestingly enough, Germany calls for global payment system independent of the U.S. That is probably going to give you a little bit of vote of no confidence here in the sense of the global payment infrastructure. So they're calling for a new payment system independent of the U.S. that would allow Brussels to be the independent in its financial operations from Washington. And so essentially that's going to be a means of rescuing the nuclear deal between Iran and the West. So they essentially said Europe should not allow the U.S. to act over our heads and at our expense. And so these are some of the things politically that can certainly start to impact what we see here financially, right? And so that's where these things are going to be tied together. And this will be one that may play out over a number of years. Now, we've had back in the day, you can remember where, do you remember the big fear, John, when China and Russia started trading together in their own dollars?
Yes.
Or their own currency?
Yes.
And you felt like this was, oh man, I can't remember how many, it was probably 8 years ago.
Something like that,
And
yeah.
it was like the world was going to come to an end. That, oh my gosh, the U.S. is going to be the dollar denomination.
Not going to be the reserve currency.
Not going to be the reserve currency.
Yeah.
What does this mean? What's going to happen?
Mm-hmm.
And it could have an impact on oil.
It could.
It could have an impact in some other financial markets.
Oil and all commodities, for the listeners, trade in dollars.
Yep.
They're denominated in dollars.
So maybe explain the importance of that.
So the importance is the dollar move affects commodity prices. Basically, that's the importance of it, and that's why you see emerging markets moving for a number of reasons. Now they have dollar-denominated debt, but they're also by and large commodity producers, and so they're sensitive to dollar moves.
And so to put that in perspective, if all you listeners out there remember, back in 2007, 2008, oil was up at about $141 a barrel. I think it got as high as 141, 147, right in that ballpark, that range. And the dollar was so bad at the time, it didn't have a whole lot of value.
Yeah.
And so typically it's going to have that inverse relationship, which is another reason why we think that it's going to be difficult for oil to really jump up there.
Yeah.
We did see quite a bit of a jump today, but that's on a supply-demand issue. Yeah. And so they're very highly correlated. In fact, we saw a 3% jump in oil, so not too bad.
Typically when the dollar's up, commodities are weaker. That's generally the way it works.
So, what do you do here? And especially now, so another impact here is thinking about global markets. Russia, they dump a ton of U.S. treasuries.
Yeah.
They go out and buy 800,000 ounces of gold. But yet the gold market doesn't seem to be moving like you would typically think.
It's an interesting trade. I heard someone say the other day that gold is trading like an emerging markets currency, which in a way is right. You know? And so you see the emerging markets currencies dropping on dollar strength, which makes a lot of sense. They have money borrowed in dollars. But you see gold dropping too on dollar strength, and that's a really interesting move. So I don't know. It's hard to know what to make of the Russian move, but you could say they're buying something that's certainly lower. Whether it's low enough, who knows? But
yeah, no, that's exactly right. So this is interesting though, because you're trading that dollar because it is high, and so this is just going back to the buy low, sell high, right?
They're buying low, selling high. You got to give them credit for that.
So it certainly makes sense. But so their gold reserves is 76 billion, and they dumped 90 billion of treasuries in April, May.
Yeah.
Now, so one misconception. So when we talk about them dumping it, you got to remember that a lot of people I hear often, hey, what happens if China they call all of our debt? China can't call our debt. We're going to have that stipulation is going to be input into any of these types of bonds when you're talking about if you're a bond holder, right? Yeah. That the debtor can essentially call it, and you want that if it's a municipality somewhere you live, because if they're going to call it, they're going to restructure it at a better rate.
Yeah.
So these foreign countries, sovereign countries who own our treasuries, if they dump it, you have to remember somebody else is buying it.
Yeah.
Or they're letting it mature, they're not buying new ones.
And then they have a certain interest in keeping the treasuries or keeping the dollar. They get paid in dollars, right? They don't want the dollar they don't want to get paid in a really bad currency in a way. So they have some incentive to keep the dollar somewhat strong.
Yeah, so don't worry and don't freak out over that. They're dumping currency. If you hear that China does or somebody else, some of it's a political game to some extent.
Yeah,
because they know it gets headline news. They know it will move the market to some extent. But you have to remember, there's always a buyer and there's always a seller.
Yeah.
And that's the way this thing's going to work. So thinking of markets in general as we speak here, we've seen Apple. Apple's made quite a bit of a move here.
Yeah.
Where do we see this thing going? I mean, we get a lot of calls on Apple, and I think that at some point you've got to think that this thing's getting pretty high.
Yeah, I think it's getting higher. Certainly, it's probably still okay priced compared to a lot of the other technology stocks. Compared to something like Tesla, it looks positively cheap probably. But even compared to Facebook and Google, Apple looks like it doesn't have to produce a lot of growth to justify its current price. You're right, though. It is getting more expensive, and it is getting harder to justify. But I think compared to the other tech stocks, it's probably okay. Now, the difficulty with Apple is that it makes a product that is very widely loved and very much in demand. But we've seen Nokia, for example, once owned 35% of the global cell phone market and now owns like nothing. No part of that market. So that's the trouble with Apple. It makes a product that everyone loves, but that could potentially be replaced more easily than other things.
It's a love-hate relationship for me when it comes to these phones. They work, then they don't.
Yeah.
They work. I still think somebody's messing with it, but that's all part of it.
Yeah.
So, hey, before we wrap this up, though, we are doing a workshop this weekend. We'd love to have you guys out. Check us out at realinvestmentadvice.com. You can sign up under the events tab, under seminars. We do have limited seating here, so don't want to scare anybody, but we'd love to have you out. Have about 4 spots left. So get on there as quick as you can. Also, check out the blog. John's written a bunch of great articles this week. RealInvestmentAdvice.com. Love to see you there. We'll be right back after this short break. You're listening to Real Investment Hour on AM 700, the voice of Texas. Stay tuned.
Very superstitious. Let it fight the fall. 13 model baby.
You can get daily real investment news you can use, delivered at the speed of the internet. Sign up for Lance's newsletter now at realinvestmentadvice.com.
A new professional version of Real Investment Advice is coming in September, but you can subscribe now for free at realinvestmentadvice.com and click on the RIA Pro tab. You'll have access to Lance Roberts' proprietary stock and ETF portfolios, analysis, and all of the critical investment information you need in one place. RIA Pro, the professional version of Real Investment Advice. Subscribe now for free at realinvestmentadvice.com and click on the RIA Pro tab.